Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 4:30 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 13th day of March, 2015, and this is the daily report for gold and silver, our weekend review. And what a week we've seen. Gold closing dramatically lower on the week, up a little bit on the day. We're looking at a weekly chart, Japanese average format, just to show you the kind of activity we have seen as this market is literally taken a straight beeline from 1300 down past 1200, and now basically at these lows that we've seen recently. Of course, this is 31, so that's the low that we want to see if it can take out. And the prior low to that was 61 right in here. So we've absolutely exceeded that. And as I say, today we are trading higher. Roughly, I think we'll close about $3 higher on the day, 1155.74. And traders, you can see our daily candle here. This is our weekly candle, of course. Tremendous sell-off, this being a week ago on Friday. But here is today's trade. We are just kind of closing off. Little bit of time left, but as I said, up about $3. Low today, 1151.30. High, 1161.10. Silver also trading higher on the day and lower on the week. This, of course, is a weekly candle. You can see that it opened up closer to 16 and closed at around 1550. In terms of today's trading activity, very quiet and very, very small range. In terms of our high is roughly at 1569, and our low on the day is roughly at 1547. More on silver in a little bit. As I said at the beginning or onset of the program, incredibly interesting week in the markets. We're looking at a 2-day gold chart. Reason for putting that up is I want to kind of put our current price point into perspective. Of course, we'll spend quite some time talking about the dollar, which is broken above 100 on the index, and a continuing fall in the equities markets. Big news, of course, is next week, waiting upon the FOMC meeting minutes to come out on Wednesday as they begin their monthly meeting on Tuesday. And everything out there, all the pundits, all the analysts are looking at one word and whether or not that word will be present or absent, and that word is patience. I know that word well. I've used it many times with my kids. But patience is the word they're looking for. In other words, when are interest rates raising? Let's look at gold in a historical context. And what I've done is these are just horizontal lines, and they're matching a couple of lows. This particular horizontal line, this is our former lows that we had roughly at 1161. Absolutely no doubt we have exceeded that and moved below that point. We're trading at 56. Now, the low that we've seen recently has been 31, and that is this particular line here. And so when we look back in terms of a historical perspective, do we see points at which we can find support or resistance in those areas? Well, when we looked at the 61, for instance, that did match up with this bottom right in here. However, this 31, when we look and move all the way back in time, as you see, when it goes back into when we were in this trading range, which would be right here, it kind of goes really through this point, so it doesn't seem as though it holds the same kind of weight that this former high has. In other words, I think that this low here is not a really strong low. There really isn't any historical data to back it. You've got this one little low here, but more importantly, in terms of where a low should come in that has some historical precedence, it's going to be that point, and it's based upon this low here in 2010, and that would be a point in which I think personally that we would see ultimate support should the market break below this particular level of 31. We are in a short position roughly at this price point. Stops are sitting above 65. For those that listened to my video yesterday, my recommendation above in this case is loose, meaning 68 to 70. I'm more comfortable at 70. And my sense is that we'll see how this market reacts at the beginning of the week, but the big news is going to be absolutely the Fed meeting next week. Extreme volatility in the market, especially when we look at oil. This, of course, is a monthly chart. Now we are trading at about 45.07, but a tremendous decline on today's basis. If we convert this into a weekly chart, we'll really have to blow that up. But you can literally see how this is pretty much fallen out of bed over this entire week. You can see it move down, and then finally, boom, we get this tremendous drop today, really propelling the market towards these recent lows in February. They were around $44. And then, of course, below that on a technical basis, whether we look at a weekly and a monthly really brings that in the best. But even if we look at it on a technical basis, we don't really get into, these are the extreme lows. These are lows on the month. But if we go for open and close just for the month, you're still just at about $40 per barrel. And that would be where I believe that oil could, in fact, move to. And if it moves to, we could see it potentially find some sort of a bottom here. But you've still got these lows that came in 09 right in here, plunging the market into that $30 range. And traders, the big news this week, of course, has been the dollar index. Dollar index now moving above 100. This is a weekly chart. It is in Japanese average format. I want to look at it both through the eyes of an average chart as well as a standard candlestick chart, and I'll show you why in a second. But the one thing that you can ascertain from a Japanese average chart is really the strength of a trend. And you do get a trend really having the maximum strength sometimes as it gets right to a top or a bottom, but you can genuinely see when a market takes off. For example, this point right in here, you've got the absence, all of these lower wicks. The market is just moving to higher highs, higher highs, higher highs. You get a small consolidation. And then look at these last couple of weeks. Look at the body size, in fact, of this week here. It rivals anything that I can look at and is probably the largest range on the day. So it tells you that that trend this week was incredibly strong. We'll go ahead and remove the study as a Japanese average study to just give us a straight candlestick chart. You can see we've closed up near the highs, over 100, and we've got a tremendous range on the day. And to really give you an idea of what we're looking at and where we see any kind of potential resistance coming in on the dollar, we really need to start going to a monthly chart. I haven't pulled out a monthly chart in a dollar index, but look at the move that we've seen this month. It really rivals only two other months. This, of course, being the first month of the year, January, you had a tremendous move there. You can see a couple of moves here and here. They happen right before we hit a top, so we'll see if that's any kind of an indication. On a technical basis, though, I've gone ahead and pulled up a couple of areas that we want to look at, and they're just horizontal lines, and I'll show you the reason for putting them up. I will simply need to add a little bit more in terms of data points to this chart, and I've done just that. Again, this is a monthly chart, dollar index. This is really going back quite some years, this being 1992 here. But what I am looking for as this market moves up is points in which we saw either a top or a bottom in the market, such as this little top right in here, and we've absolutely exceeded that. The next real area that we can look at is this top right in here, and that would be our next real level of resistance, roughly at around 102. So that is where I think that if we are going to find some resistance, that's the next point we want to really look at. But the dollar index absolutely on fire. And traders, the equities markets, they have attempted, of course, to find some sort of footing throughout the week. The market has been under pressure. We talked about the fact that one thing that we have observed are these rounded tops really giving us a precursor, so to speak, to some sort of a dramatic sell-off. We've certainly got this here, but when we consider the kinds of sell-offs that we've seen on these prior two tops, they've been a lot more extreme or deep than this current one. And when we look at that, if this continues, the next real level of support, strong level of support, comes in at around 2,000 on the E-mini or Standard & Poor's 500. But also by looking at the shorter term Fibonacci retracement, and I have just added a fib retracement really from this bottom to this top so we could get some of the minor points. We will have a support level that comes in the 61% at 2023 right in here. So we'll have to take a look and see how this market unfolds next week. And traders, as far as silver goes, we see the same type of decline that we've been looking at gold. They seem to be tracking together. There is times when there's a divergence between the two, but we've got the defined downtrend. I really don't see any real support coming into the market until about $15. It's based upon this low. Of course, we've got this whole series of lows right in here, but we're pretty much effectively right at that point. So if it were to find a little bit of support here on a technical basis, of course, I really think it would be based on this. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.